So I would love to shift into a new topic centered around housing trends and market forecasting. So, what advice are you currently giving to first-time home buyers in this current market, which, as we know, is really ebbing and flowing at the moment?
Yeah, so I think every market over time has its areas of opportunity. And a lot earlier we talked about all these things like our 401ks dropping and market volatility and that K-shaped economy, right? So the haves having a lot, and right now the haves being a little worried that a lot of their assets and things like that are shaky. Um, so the first time home buyers, let's say more in the middle, upper part of the K sloping down, right? Sort of that segment. I think there's going to be a lot of opportunity for them coming up. I think, especially in DC. So if I truly believe that the expansion we experienced in Washington D.C. from 2010 to 20, that really just went dormant from 21 to very recently. I think we're going to see a very similar expansion, and I think there's just a lot of real estate opportunity specifically in DC. You have work from home unwinding. I think if the local economy needs to be a little less dependent on government, I believe DC policymakers will have to get a little better at maybe adjusting tax policy or bringing in different industries into our market. But prices I'm already seeing in many areas, I'm seeing condo prices selling for 2014, 2015, 16 prices right now, and sellers willing
Wow.
to pay closing costs. There are grant programs out there. I mean, there's just so many things for the first time home buyer to use to get active in real estate. So the problem is a lot of people, they want to go all in when everyone's going all in, right? So like
Yeah.
like the herd mentality. So if in 2021
Hmm.
everyone you met was like, "Oh my god, I want to buy a place. Look at all this equity you're getting. I want to buy 5 places. I want to be a landlord, right? How can I buy a lot of houses?" And now it's probably the time where I think people should get a little bit more aggressive. Still selective, deal with a good agent that's understands negotiations, understands local micro trends of sort of kind of think of like micro communities, not really like the district, but like Petworth, right? Like narrow into certain areas. Um, that's probably what I would say. I think it's going to be a really good time for them. I think they'll have a little less competition. I think sellers will pay closing costs. I think prices have already rebalanced. I think there's a chance we get a little rebalancing in interest rates, which will also help. And there are consistent programs that seem to be very stable and around for people, let's say, that make less than 130 grand a year or something like that. They have subsidized interest rate programs, they have grant programs and things that'll help them. So I'm really excited for them.
So, would you say that we are in a buyer's market, a seller's market, or something new entirely?
So I mean, broadly speaking, I think it is one of the more balanced markets that I've seen, except for the DC condo market. Balanced in the sense that there will be some houses that go nuts where there's a whole bunch of people bidding. And I think a half a mile away, a house will sit for 21 days and you'll negotiate on price. And you might be the only person trying to bid on that house. Um, I know it's like not a great way of answering the question, but it's like a real housing
No.
market, where
Yeah.
2021 was just insane. Like every single house had multiple offers. No one really knew the price. Agents had it so easy. They could list it for stupid low and get like a whole bunch of bidders escalating to the moon. And then obviously do due diligence to choose the right one. But now it takes real professionalism to figure out real pricing strategies. And it's probably just balanced. I wouldn't say it's one or the other right now.
Yeah, I agree. I feel like we've seen a lot of agents leave since the industry since that time where maybe it was a little bit easier. And like you were just saying, people were getting multiple offers. They could price it a little bit lower and then just let the magic do its thing.
Yeah, it was interesting.
But it's
It's
interesting.
interesting you say that. But we've seen that in the lending side too. Like when everything is really easy, if I'm an agent in 2021, the answer was simple. You have to offer a lot. You need to waive all your contingencies and you need to settle fast. And we'll do this pre-offer inspection thing that everyone's doing. And just talk to your lender about what happens if this appraises low. And then the lender would usually put some guardrails into what that person could do. And then the contract was written. So the market, while hard, made putting contracts together easy. And now we're just in a different space where I have some really big sale prices and smaller ones. A house listed for 2.5 where the ratified offer is 1.8. Like, you just wouldn't normally hear of
Wow.
those things. Or a house
Right.
that is 1.4 and has no offers for a few weeks, but then all of a sudden has two really competitive offers at the same time. I would say the
Hmm.
maybe a problem in this market is a lot of people look at days on market and they automatically assume that that property, like, no one wants it, and I can go in and be like super opportunistic, right? I'm going to go in and offer 20% lower. But what happens in markets like this is a lot of buyers, they're looking for tens, and if they find an 8.5, well, in 2021, they would just do it, right? It worked. It's good enough. Let me try. Well, today it better be a 10. And if it's an 8.5, they just tell the agent, hey, I'm not ready to write on it. I really, really like it. If another offer comes in, let me know. I'm just going to kind of wait and see what else comes on the market. And then a couple weeks goes by, and then finally an offer comes in. That agent's going to do their job. They call the other people interested, and this thing then becomes competitive. So, it's an interesting market right now for sure.
Yeah, sounds like it's something new that we're in and we're dealing with and learning from as
Mhm.
we go. So what's the most important question a home buyer should ask a lender during their initial conversation?
Man, I don't know if there is one. Uh, you know, when you think of lending conversations, what I find is that everyone sort of goes in and maybe the question is, what do I qualify for? So maybe this is the answer. This weekend I had 3 of these phone calls. Hey, I think I found a house, but I really just want to see what I qualify for. And when I give them the number, it's a mortgage payment that's about 3 times bigger than they're comfortable paying. And they're like, "Well, that's stupid.
Mhm.
I don't want a $8,000 mortgage. That's ridiculous." So maybe the better question is, okay,
Yeah.
now let's talk about what's responsible for you based on what you're trying to accomplish in life. And it's so different for everyone. I had one, a single mom, 2 kids, and she was trying to be in a very specific school district. That conversation was all about how much house can I buy? It's going to be a struggle. I get it. I know it. I got 2 kids. I want to be in that school district. How big of a place can I get? And then you have the opposite spectrum of 2 people, not a lot of debt. In DC, the average attorney is going to make something like 250. The average non-DC person probably makes 150, which sounds crazy to people maybe around the country watching this, but 400,000 a year is not
Mhm.
like a lot of money in this area. So for that person, they could get a $15,000 mortgage, which is ridiculous. Like, they might want something at 6,000. And one person had a quote, their payment was about 8,000 a month this weekend. And the more we started digging into it, it's like, well, we do plan on having kids. And wow, childcare is 2,500 a month. Huh. And then you start thinking, like, yeah, 8 today's works, but fast forwarding life, maybe it gets hard. What if I choose not to work? And all that stuff gets more complicated. So maybe it is, what is what are the things I should be thinking about so that I choose a very responsible payment and buy something that helps me achieve my long-term goals, whatever those are.
Yeah, no, I agree. And it takes me back to the not my second home purchase, but my first home purchase. I felt like the question from me mostly was, what do I qualify for? What do I qualify for? And if I look back, the my questions should have been, what am I comfortable paying? Because what I qualified for, as you're saying right now, it was significantly higher than what I would have been comfortable paying on a day-to-day basis. And I remember the lender I worked with at the time, I remember asking, like, should I put more money into this? And because I have it, what should I do? And it was, no, keep the money, keep the cash on hand, because this is going to be a higher payment for a while, and you're not getting that raise until next year or something like that. So again, it felt like, at least with who I was working with, being guided through that process. It might have been easier for him to say, sure, throw more money in, let's increase that loan amount or
Mhm.
whatever. But it was, no, no, hold on to your money, get used to this new payment that you're going to have, and keep some cash on hand. So that was really helpful. But I think if I had gone back at that period, my question would have been less what can I or what do I qualify for, and more what am I
Hmm.
comfortable paying
Yeah,
every month, knowing that life can
for sure.
change.
The first 10 years of my
It's
career, I did
interesting.
new construction. And when you're a lender on a new construction community, and I'm young also, right? I'm in my 20s. I don't know anything. All I know is what I've taught,
Obviously.
and I knew what the industry preaches, which is answer questions, tell people, can they do what they want to do, and then you just move on, give them a quote, and try to convert the client. And builders would always just lean in and try to sell more options, more upgrades. Can they add this? Can they add this? Can they add this? And everything was always about, sure, I can make it work. Maybe we'll do this. And so some creativity to squeeze these people into these higher prices. So then fast forward 2009, 10, 11, and 12, I became a counselor with all these people having short sales and foreclosures and just
I bet.
massive financial problems. And I just remembered in that moment saying, I'm not ever going to be that person that just says, answers your question, can you, yes or no? It's going to be a yes, but have you considered? Have you thought about? What if?
Yeah.
And then if at the end of all that you still say, I want this, then sure, it's you're a responsible adult. You can make decisions. But I think a lot of people don't know a lot of that stuff because they also don't know,
Yeah.
like, there's no school that you go to about like how to shop for a mortgage, how to buy a house. You're meeting
Mhm.
salespeople. You're meeting a realtor that has a sales focus. You're meeting a lender that has a sales focus, and everyone's trying to sell real estate. So, again, I do think if people knew how to ask better questions, it would help them. And luckily, there's people, like my practice, that where we're more consultants than we are just loan officers. And I think people get a little bit more from that.
Exactly. At what stage in planning should a home buyer bring a lender into the conversation?
So personally, I think we should be the first person they talk to, because the financials is just, it's like everything, right? What I would say when I see problems, financial problems in people, it's when they were led by the emotional side of real estate as opposed to first starting with
Mm.
finance. I'll give you an example. Um, it's not uncommon. One of the calls I had this weekend, I'd never talked to the people before. They've actually been casually looking for a year. I think maybe even a little more. And they stumbled upon this house. It was 1.449 in Washington, D.C., beautiful place. And now they're frantic. They're trying to talk to 3 different lenders, and everything was, can I, can I, can I? And that was the couple we were talking about, where maybe they could have a kid in a few years. And wow, childcare is $2,500. Oh, that payment's $8,000 a month. They are having all those uncertainties. Now, if they write on that house, I guess maybe a better way to say it, they might not write on that house. Actually, they're like a little unsure, and it's a beautiful place, like great developer, recent renovation, perfect. It's a really, really, really nice house for them, and they can totally afford it. So, but they're a little unsure, and because they didn't start with lending previously and didn't fully walk through the understanding of what this is financially, their hesitation might cause them to lose the house, even though the outcome may have been the same, like they would have still gone forward with it. So I think talking to a lender earlier, it gives you confidence to move when you see this thing you want to buy. And it also helps you target what you should be looking at. So it's kind of a twofold thing. Some agents are really good just with history of experience at just kind of knowing, and they'll ask probing questions too, just basic qualification things. Like you can kind of know at today's rates, every 100,000 you finance is about 600 a month, right? So if you're going to borrow $1,000,000, it's 6,000 plus taxes and insurance. So you can kind of like wing those payments a little bit. And some agents will do that to guide the ship until it gets more serious. But obviously, I'm going to say talk to a lender first because I'm a lender. And realtors would probably
I
be like,
know.
oh, I'd rather them talk to me first so I could give them the lenders that I like to work with. So somewhere in there,
Of course.
it's
Of
where we're at.
course. I know. I know. But and I'm a little biased as well, because as a former lender, I see so much value in everything that you're saying. In my loan officer days, I was able to filter out so many people who thought that this was an option for them anytime soon. Instead, it turned into a conversation of, not right now. This is what you got to do instead. You got
Mm-hmm.
to clean up your credit. You got to save up some more money or whatever. And that I'd like to think that saved a realtor or two a
A lot of
lot of
time. Right.
time,
For sure.
coming to us first. So I think it obviously depends, but I'm totally with you. I think there's a lot to be said for someone just being like, here's my stuff, here's my credit, here's my money. Like, what does this look like for me? And if there's something there, then talk to a realtor. But yeah, we're both biased
Yeah.
there. So
And I would say back to that earlier point about people not knowing truly if the lender's really good. I mean, the best, getting a referral from anyone is always sort of the best path, I believe. And especially if it comes from friends or family or multiple friends or family or, people at
definitely.
work or something like that, that the real estate agent tends to be the best networker around. They know all the good, bad, ugly mortgage companies, specific loan officers. So maybe choosing the realtor first is the best, but then very
Yeah.
quickly getting the lender involved, right? So realtor
Yes.
connection. Okay, I trust you. I've had friends that have used you. I know you're going to be a good fit for me. Okay, now who's your team? Oh, my team is these
Yeah.
two or three lenders. I like Allied Title, so title questions, right? Call Leah. Otherwise, call one of these two or three people. So that's
Hmm.
probably the ideal path, I would say.
Yeah. Yeah. I agree. Last question under this topic before I get into some rapid fire questions with you. But I feel like many people don't know that when we're talking about down payment options, I feel like many people don't know they can borrow like from their
Mhm.
401k interest free. They might think like they could take out an early loan and be penalized for that, pay the taxes on it. But I just feel like, at least in my experience, not a lot of people know that this is a
Mhm.
thing. So, do you agree with that? And do you think there needs to be more education around it? And also, do you think it's smart if it's really someone's only option, if they don't have the money coming from
Yeah.
anywhere else?
Lots of different answers to that, unfortunately. Like for instance, right now, so I just
Yeah,
wanted to
it's
look at the
okay.
market. So we're in this several days of flash crashes in the market. This is what day are we? We are
Mm-hmm.
April 7th, time of shooting this. Market's kind of flat after being down 5% today, but we're about down 15-ish percent from the high. Um, and then this sell off might not make a lot of sense, might rebound sooner than we think, and a more rapid move higher. So when you go to take a 401k loan, you're essentially pulling money out of your investments and you're giving it to yourself to use for your housing investment. So when markets are really high, like anyone that took a 401k loan a few months ago when the stock market was at all-time highs, I think they were geniuses because they were pulling money out at the high and then they're going to slowly pay it back over time at hopefully lower
Yeah.
levels, right? Short term. But then if I had someone right now thinking of taking a 401k loan, I might have them look into it a little deeper. How do maybe we should take a smaller one. Maybe we should wait a little bit later, like right before closing instead of right now. I think there's lots of, I always say my rules are one, looking at where we are in the market cycle, where our stocks, where are we likely to go from here? How long will it take you to pay it back? I usually like seeing people try to pay it back in 2 years, which sounds crazy, but if there's a way of paying it back very
Mm-hmm.
quickly, your 65-year-old self will say thanks. Um, and then the other part is just understanding that when you leave your current job, you only have 60 days to pay that money back, or they count it as an automatic distribution and they charge you the 10% late fee and the income taxes, whether it's a Roth or not, right? 401k. So I think as long as you
Yep.
understand the rules, we use it a ton, an awful lot for people to buy a house, especially if it's their only option. You think of every dollar you have is money you're investing in something. So if you pulled out 30,000 from a 401k as an example, and that 30,000 helped you buy a $600,000 home, and that $600,000 home appreciated at 2% a year, well, that's a $12,000 gain. So you borrowed 30 grand and you're making 12,000 a year on that. That's a really good return, right? 40% return cash on equity. So, I think there's an argument for yes, it's really good. every financial advisor would be like, no, don't ever do it. It's the worst thing ever. The answer is somewhere in the middle, and it just depends on who the person is and where we are in the cycles.
Yeah, makes sense. I get it.